Is UMS integration the next semiconductor turnaround stock? After a tough 2024, UMS has had a solid Q1 2025. But is it a genuine buy? In the next 10 minutes, we'll decode its recent earnings, growth strategy, valuation, and risks. Stick around. I'll share whether I'd invest at today's prices. Hey investor, welcome to Durian Finance. If you're into Singapore stocks or the semiconductor supply chain, you're in the right place. Today, UMS Integration, a company transforming from precision machining to an integrated semiconductor supply partner. Let's dive in. Disclaimer: this video is for informational and educational purposes only. It does not constitute financial advice or a recommendation to buy or sell any securities. Please do your own research or consult a licensed financial advisor before making any investment decisions. The creator of this content is not liable for any financial losses incurred. Recent Q1 2025 performance. Revenue: 57.7 million Singapore dollars, plus 6.8% year-on-year. Net income: 9.8 million Singapore dollars, flat versus last year. Margin 17%, slightly down from 18%. Growth in revenue is healthy, margin dip is minor. On FY2024 Recap, revenue 242 million Singapore dollars, up 19% year-on-year. Net profit 40.6 million Singapore dollars, down 32%. Despite downturn, free cash flow remained positive at 24 million Singapore dollars. Expansion and growth strategy. Penang plant acquired 5.38 acres July 2024. Mass production already underway. New customer ramp up from 2H 2024. Additional assembly capacity planned. Secondary listing in Malaysia submitted. Broader visibility, funding flexibility. Let's talk about what the analysts are saying. UOB Kay Hian has a target price of 1 Singapore dollar and 21 cents, which implies a 13% upside. They value the stock at around 17.6 times forward earnings for FY 2025. Their optimism comes from UMS's strong capital expenditure plans, growing demand from AI-driven semiconductor fabs, and promising growth in the aerospace segment. Over at DBS, they're even more bullish, with a target price of 1 Singapore dollar and 38 cents, or a 30% upside. While they acknowledge a slight trim in net margins, they remain confident in UMS's expansion strategy, especially the strategic move into Penang, which they believe will pay off as new customers ramp up. From a valuation standpoint, UMS is trading at a forward PE of around 19.7 times, with a price to book of 2.3 and an EV to EBITDA multiple of 13.3. While this may seem pricey at first glance, it's important to note that UMS is practically debt-free, holding nearly 82 million Singapore dollars in cash, and continues to offer a forward dividend yield of almost 5%, which is highly competitive among tech peers. Compared to regional semiconductor manufacturers, UMS trades at a modest premium, but that's largely justified by its clean balance sheet, strong cash position, and expansion into Penang, which analysts believe will support profitable recovery from 2H 2025 onwards. Now, let's take a step back and talk about some of the key risks you need to know. First, executive compensation has raised eyebrows. UMS's CEO reportedly received about 5.5 million Singapore dollars, which is significantly higher than many of its peers. This could be a red flag for governance-focused investors. Next, earnings per share have declined at an average of 10% per year over the last 3 years, reflecting the cyclical nature of the semiconductor sector and recent industry headwinds. UMS also isn't immune to inventory swings and semiconductor demand volatility, which could affect its margins and order visibility. Finally, the company recently cut its dividend by 17%, reducing its payout to 1 cent, with the next ex-dividend date coming up on July 24th. These factors don't make UMS uninvestable, but they do remind us that even promising stocks come with risk. Recap: UMS is emerging from a dip. Q1 revenue is growing, margin stable, expansion underway. Analysts like UOB and DBS remain positive. Buy or not? If you're bullish on semiconductor capex revival, regional diversification, and don't mind some cyclic risk and governance concerns, UMS offers upside, especially with 4 to 5% dividend yield and 2 analyst TPs above current $1.36. But if you're wary of management compensation or sector cyclicality, you might wait for post-fab recovery confirmation in H2 2025. Personally, I'd initiate a very small position near current levels, with a stop loss if Q2 margins or CAPEX execution disappoint. Let me know in comments. Are you loading up on UMS or skipping it? Don't forget to like, subscribe, and hit the bell. Thanks for watching. See you next time.